The show's not over till the fat lady sings, right? It's an old opera saying that means you should not presume to know the outcome of an event still in progress. In this case, we are talking about the gold rush. 2020 has been the year of COVID, US election insanity, a Saudi-Russian oil price war, and of gold prices hitting $2,000 before pulling back again, on top of countless other major happenings. But it isn't over yet. At the time of making this video, another hard-hitting wave of COVID is well underway, with more lockdowns, curfews, and other restrictions worldwide. 2021 is just around the corner, and many legacy events will spill over. There will be rising economic and political uncertainty with record levels of unemployment, debt, and money printing by central banks. Perhaps the biggest danger for the world economy, as the trillions of dollars governments have printed to prop up their COVID-ravaged economies indicate mass inflation. Gold will take its usual safe haven stance by being the go-to asset for diversification and to reduce the risk of exposure to the stock market. Political or economic turmoil is always positive for gold. The new records set this year for gold, silver, and Bitcoin raise the question of whether this rise is sustainable or whether these price levels are just a symptom of the current situation. All governments will be hit by the double whammy of having less tax input to compensate for their expenditures, leaving them little choice other than to borrow or print the money. With central banks all on the same page, lending is not a feasible option, so it falls to the printing presses to make up the shortfall. This quantitative easing, aka money printing, is how the fiscal stimulus and furloughing is being paid for, and at some point, it is going to have to be paid back. Simply put, the financial crisis has only just begun. Goldman Sachs has forecast gold at $2,300 for 2021. Bank of America is predicting $3,000 for gold next year, and well-known financial journalist Paul Garner is predicting $5,000 by 2023. Garner's reasoning is the official U.S. national debt, the price of crude oil, and the S&P 500 index, factors used to measure economic growth that Garner averaged the price of gold against. Cryptocurrency has done especially well this year, with the volatility and risk of Bitcoin acting as an advantage for gold. While the rest of the world moves nearer to financial independence from the dollar, all the money the U.S. has lent to other countries will be worth less as its relative value decreases. The decline in the value of the U.S. dollar is directly related to geopolitical concerns and policy by the U.S. worldwide, which could move the price of the dollar and metals quickly and forcibly. A post-Trump and post-COVID vaccination administration in Washington will completely alter the landscape of American and world politics. Talk throughout the globe of the Great Reset, a time of massive change for everyone. By starting a fourth industrial revolution and combining this with inclusion, equity, and social justice, this reset will shake the accepted way of doing things to the core. The brave and inexperienced alike will face volatility like never before. Precious metals have inherent stability, safety, and promising upside potential that will see you through 2021 and beyond.